Bitcoin went from 6,000 to 20,000 to 6,000. Well, fundamentally, very little actually changed about the asset.
The land of Arcadia.
Well, hello there. Chris Marcus here with you on Friday, April 13th. And actually a bit of a scary time in the markets if you're a banker anyway. But fortunately for the rest of us, if you're just a regular honest person trying to keep your money safe and protected and growing, well, then you're in luck because that's what we're going to cover today. A few interesting developments. First one to start with, as you can see here, S&P puts Deutsche Bank on credit watch negative. And certainly if you want to take a look, this is an article that was on Zero Hedge. Deutsche Bank has been changing its CEO recently. And by all means, if you want to take a look through that article, it's worthwhile. The reason I'm mentioning this is I would say even before I left the trading floor back in 2012, I've heard for years that Deutsche Bank, and again, we'll put this in the rumor category, but just to the degree that, I don't know, I think there's something to it rather than completely nothing, but basically that Deutsche Bank was a trade or two away from blowing up in perhaps, if you want to say, similar fashion to Lehman Brothers. So it's interesting. We'll take a look at the stock price here. So here's the 5-year. Let's take a look at the max. You can see in May of 2007, Deutsche Bank all the way up at 120 bucks. Then in 2009 down to 16, then went back up to 50, and has been declining since then. And we've had a few scares as it's gotten close to 10 bucks. There have been a couple times where there have been rumors, is Deutsche Bank in trouble? Now, again, just because the rating agency says it, usually a little bit behind the game. So maybe the fact that S&P is actually putting the rating on watch for downgrade, we'll keep an eye on that. But just, when you have these large systemic banks that, if one of them fails, can really take down the rest with them. Given the degree to which the policy the Fed and the other central banks have done, it's not like it's, maybe a bank will implode. I mean, it's almost as like gravity. At some point, things are going to come down, and these banks, as rates continue to rise, which you want to know what's going on with the rising rates back here on the Arcadia Economics website, tried to explain that this week. But that's the thing, it's an inevitability. That's why it's not a great idea to print money in the first place, because when you unwind it, you have the excesses removed, which is usually not as much fun. In my opinion, I think if you ever had rates go up and the Fed sell off the balance sheet, a lot of these banks are really going to run into trouble. Nothing's changed since 2008, except it was printed and papered over at a faster rate. So in any case, just something to keep an eye on with Deutsche Bank there. Of course, we got a Wall Street Journal alert. Trump pardoned former somebody. Can't even imagine what that one's about. But we will stick to the script for now, because in case Deutsche Bank doesn't take this baby down, it seems like the White House is going to do their best, because now the plan is to escalate trade pressure on China. Quick review. Report that earlier this year, China might stop buying treasuries. They're going to look at the supply and the tone of the relationship with the U.S. Fast forward a couple months. Now we hear, as the debt's crossed 20 trillion, we hear talk about how the next target is 30 trillion, so no end in supply of debt. And of course, in terms of the political relations, we have a trade war. Keep in mind, now this was interesting, Trump White House confident that its hardline strategy is succeeding. I don't know how you measure that one, but basically again, remember, this is the largest creditor, the biggest buyer of U.S. debt. And there was the first tariff. China responds a day later, sending a tariff back. As I mentioned, I believe in last week's video, or maybe it was an article I wrote, Steve Mnuchin actually came out and was saying, this isn't fair. They slapped us with a tariff. Well, it's like that he hit me back first. Like, what were you expecting to happen? So, of course, what did they do? The U.S. came back, one-ups it again, and looks like they're not done. So, I don't know. Perhaps behind the scenes, maybe Trump is actually trying to bring this banking behemoth down. Certainly, if you wanted to really take a wrecking ball to the economy, this is a great way to do it. We'll see what's really going on behind the scenes. I get the feeling that there is a lot that is different from what we're presented with. But again, just from a sheer economic standpoint, it's baffling policy. At the same time, you have a petro-yuan giving an alternative to the petrodollar. You have, I guess, Hungary is now asking for their gold back. Germany's asked for their gold back. China's buying gold. I mean, you put all these clues together, and it's baffling policy, but we will see how that unfolds. Again, why I like alternative assets and currencies, which we will get to in a second, because finally some good news for the Bitcoin crowd, the crypto crowd in general. Although real quick, here is a look at the US 10-year, which, again, you can see going back to September, where it was at 2.05%, almost got up to about 2.95, I think was the high earlier this year, has kind of settled, which is a little unusual given the Fed's policy, more rate hikes, talking about rate hikes, giving the impression that they're going to step away. But as we'll get to in the cryptos now, there's a factor that perhaps is worth keeping in mind, maybe will help explain that to some degree, because you have the underlying asset, whether it's a crypto, silver, treasury, and the underlying asset theoretically has some value that we'll call X, whatever it's worth. And we won't debate today what any of these in particular are worth, but there's some theoretical amount that it's worth. Now, in terms of the trading and pricing, first of all, there's this idea of the efficient market hypothesis, which sounds great in the textbook, yet the idea that everybody's getting the same information, processing it in the same perfectly correct manner at the same exact time, in case you haven't noticed, is not exactly how these things often go. So the point being that, Bitcoin went from 6,000 to 20,000 to 6,000. Well, fundamentally, very little actually changed about the asset. Maybe it's going to save the world. Maybe it's tulip mania. I don't believe that that's the case. But in either case, nothing changed. It was more the trading around it, the human emotion, and especially in a small market. See, if you look up here, whole crypto market cap, 328 billion. Let's see, do we have market cap for Bitcoin, 137 billion, compared to 76 trillion or so in the world stock market. So yeah, you could have just one big order move the market a lot, of which there have been rumors that the Mt. Gox settlement had about $400 million that, I don't know if they had to sell off, but did sell off in somewhat bizarre, suspect fashion. But that aside, still, if you have someone with a trade or someone needs the money, because the market is so small relatively, you'll see these price swings. But that doesn't necessarily mean that anything has changed in terms of what the long-term picture is. So, which is again why I keep looking at the adoption, thinking about the technology, thinking about what's happening with the macroeconomics, and seeing what's happening with the dollar, leaving us with a clear need for some sort of replacement, of which I still believe is going to be a combination of cryptos and metals leading the way. And as you can see here, it was interesting. Bitcoin, again, I'm more comfortable talking about the manipulation in the silver market from the standpoint I've studied it for a decade, have a lot more data and evidence that I can present there. It is interesting, though, that ever since the launch of that Bitcoin futures contract, it's essentially been turned into the silver market where it usually just sits there for the last couple months. And in particular with Bitcoin, found it interesting how for, I don't know, 2 or 3 weeks, it seemed like it was between 6,900 and just right under 7,000, which on one hand could just be whatever was happening in the market, although given what we've seen in other markets that are manipulated, where often there's a lot of stop orders or just general psychology, which maybe whether is a good way to approach these things or not, saying, well, if it crosses 7 through 7,000, then I buy. You know, that's a whole other argument of whether that's the best way to go, yet still that is something that happens. So I was curious, it just kept to be 69.23, 69.57. And then sure enough, if we can take a look at the chart here, let's see. Basically, it was either yesterday or maybe Wednesday night. Let's take a look at the 7-day. So you see it's sitting right around 6,700, 6,800, and then it really spiked up. Once it crossed through, went through 7,000 straight up to 7,600. Now is over 8,000, 8,108 today. So at least some good news if you are a crypto holder. Not been the most fun past few months. For what it's worth, to me, very little has fundamentally changed. So while the price is down, I've just sat there and held what I own. Had to sell a few things to cover some expenses, which was a little bit painful at these prices. But for the most part, whatever I have saved, I leave as minimum as possible in U.S. cash. You know, a good bit in cryptos, a good bit in metals, which, you know, perhaps is more aggressive than is ideal, and not necessarily recommending that to anyone else, but just to the degree that at least demonstrating that I'm not just saying it for whatever it's worth, that's putting my money behind it as well. So certainly we'll see what happens there. And then lastly, in gold and silver, wrote a couple articles this week for Miles Franklin, who I've partnered with, that I think may be interesting to you. Certainly wondering how the Chinese are feeling about buying the treasuries now. I thought it was also interesting to think about whether these bubbles are teetering, which I believe they are. And then lastly, talk a lot about the silver manipulation, yet to the degree you always like to think of, all right, maybe I'm missing something here. How could I be wrong? So really looking at silver in terms of, all right, let's say somehow I've gone nuts and the market is clean. Would it still be a good investment even if the manipulation school of thought was not accurate? And I think if you want to know the answer, then go to Miles Franklin. What if silver isn't manipulated after all? And should you be interested in buying gold or silver, certainly I recommend Miles Franklin, and you can call Andy Sheckman, tell him I sent you over there. And because certainly at today's prices, if we take a look at Kitco there, silver at $16, gold below 1,400, given again what's going on in the world, seem like great buys to me. So there we see silver 1663 on the left. Gold is at 1343. So if you're wondering, is it too late? Certainly if you're thinking about taking money out of stocks or bonds or real estate and looking at cryptos or gold and silver at today's levels, I think that's a great trade, especially when you look at what's coming, what's happening. Again, that's going to be different for everyone, so you got to do what's right for you. And again, doesn't mean you have to load up everything Although having some exposure to metals and cryptos for the reasons that I've just talked about throughout this video, I think is going to serve you well. If you have questions, leave them below. Visit arcadiaeconomics.com if you have anything you'd like to contact me directly, get an opinion on. Love hearing from our fans and friends out there. So with that said, go enjoy these glorious prices. Hopefully cryptos will continue to go up. Maybe we'll have some good news there. Maybe silver will actually go up sometime soon in the near future. And with that said, hope you have a great weekend, and I will see you again next week. Thanks.